What's up, Chad? This is Justin, Elevate Credit. Today is day 215. How to obtain financing for real estate. So, thank you guys for following this journey from day 0 to reuniting my wife and my son here in the U.S. We're talking credit repair, business funding, real estate investing. Just taking that next step to achieve that next level. So, today we're talking about financing specifically for real estate. It's a whole different world. Remember, there are different ways that we can get financing and funding. There's financing and funding based on income, collateral, and of course credit, our personal credit. Real estate, there are lots of different ways to finance real estate projects and utilizing realistically all three. Of course, the most conventional way to get a loan for a real estate project or a piece of property is to go to a bank and or a mortgage lender, right? And they're going to charge you fees and points and origination fees, and it's going to be more expensive than other methods, and you may or may not even get the loan because underwriting may not approve the financing altogether. So it's a little more difficult to get and expensive to get financing in the conventional space. Now, of course, you have to remember that there are different types of properties as well. And there's different types of loans, and there's different types of terms, and realistically, there's a lot of different ways, to do the deal with a piece of real estate. In the conventional space, again, there is lending for 1 to 4 units, and there's different types of lendings for 5+ units and commercial units and development projects. So there are different banks and lending modules and brokers that you would need to speak to based on the type of property that you have. It's not necessarily the most favorable, but of course it's the bread and butter. It's the easiest way that people know how to go get financing to fund real estate deals. The next method, of course, is the hard money lender. Hard money lender is typically used for a bridge loan, for just for time and bridging from acquiring the property to refinancing it into some type of conventional lending. Hard money is also used for flipping projects, short-term projects. Hard money lenders, again, they're going to want points, they're going to want origination fees. They charge typically 8 to 12% interest-only loans for anywhere from 3 to 6 to 12. I've seen them go up to 18 months of financing. So those types of loans are available typically for your short-term financing. And then you have your private investors. Private investors are my favorite. These are typically your friends, your family, that they see what you're doing. They see that you're making money with real estate. They say, hey, I have some money, I want to invest. So this is an opportunity to put their money to work, secure it in first and or second position, deed of trust in the property, and you can pay them, whatever the terms that you can come up with, whether it's interest only or whether it's amortized, or if it's monthly payments or quarterly payments, or payments when the deal sells, payments at the end, payments at the beginning, charging points, not charging points. It's all negotiable with private lenders. That's why I like working with private lenders. You just have to keep them happy, right? And it's a lot more casual than going to the banks and or hard money lenders where there's more regulation. The fourth, and of course my most favorite way of financing real estate is through seller financing. Going out and finding sellers who want to sell their home and who are willing to participate in the sale of their home with, say, a down payment and monthly installments, whether, again, if it's amortized and or interest only over a specified term, 7, 10, 15 years. And it's possible to defer capital gains, which can be in their favor. It's also favorable for them to not use a realtor in this transaction, which can shave off 5, 6, 7% off the sales price. So there are a lot of benefits to seller finance deals. That's why I like them. So there are lots of different ways to finance real estate deals. That's not an all-inclusive list. There's also other methods as well, but those are four of the most typical ways to finance real estate deals. So thank you guys for following. Remember to hit that like button, smash that subscribe button, leave a comment. It helps the algorithms. Check out the link. We have ebooks, e-courses, trade lines, dispute letters, everything that you need to do it yourself. Or if you're interested in one-on-one, we can do that as well. And of course, last but not least, to my son, Josiah's son, you are blessed, you are anointed. Remember to use credit responsibly, son, to your success. Salud.